What if you could own a piece of a New York skyscraper for just $100, or earn interest from U.S. government treasury bonds starting today with just $50, or trade gold at 3 a.m. on a Sunday from your phone instantly with no middleman involved? This is not a fantasy. This is already happening in 2026, and the technology making it possible is called real-world asset tokenization, or RWA. The tokenized RWA market has surpassed $30 billion in on-chain value in 2026, McKinsey projects. It could reach $2 trillion by 2030. BlackRock, JPMorgan, Goldman Sachs, and Franklin Templeton are all already in. In this video, I am going to explain everything about real-world assets, what they are, how they work, why the biggest financial institutions in the world are racing into this space, and most importantly what it means for you as an investor. This is one of the most important trends in crypto and traditional finance right now. Let's get into it. What are real-world assets? RWA explained simply. Let's start with the basics. What exactly are real-world assets in crypto? Real-world assets, or RWAs, are exactly what they sound like. They are traditional, physical, or financial assets that exist in the real world, things like gold, government bonds, real estate, stocks, private credit, and commodities that have been converted into digital tokens on a blockchain. This process of converting a real-world asset into a digital token is called tokenization. Here is a simple example to make it crystal clear. Imagine a commercial building worth $10 million. Normally, to invest in that building, you would need millions of dollars, a team of lawyers, months of paperwork, and a network of real estate contacts, completely out of reach for most people. Now imagine that building is tokenized. Its ownership is divided into 10 million digital tokens, each worth $1. Anyone, anywhere in the world, can buy one token for $1 and become a fractional owner of that building. They receive their share of the rental income automatically through a smart contract, and they can sell their token instantly on a secondary market at any time of day. That is the power of RWA tokenization. Real-world assets are digital tokens on a blockchain that represent ownership of tangible physical assets or traditional financial instruments, such as real estate, government bonds, or gold. By putting these assets on blockchain, tokenization allows for 24/7 trading, fractional ownership, and instant settlement within the DeFi ecosystem. The key insight is this: RWA tokenization takes assets that were previously locked behind high minimums, geographic restrictions, and bureaucratic delays and makes them accessible, tradable, and programmable for anyone with a smartphone. The size of the RWA market in 2026, the numbers are staggering. Let's talk about just how big the RWA market has become, because the numbers are genuinely extraordinary. As of April 27, 2026, tokenized RWAs excluding stablecoins stand at $30.10 billion on-chain, up 9.25% in the past 30 days. Including stablecoins as RWA-adjacent assets, the total RWA value exceeds $300 billion. The on-chain RWA market surged following 300% plus recent growth, institutional adoption, treasury dominance, yield demand, and DeFi integration are pushing projections toward $100 billion by the end of 2026, and looking further ahead, McKinsey projects the tokenized RWA market could reach $2 trillion by 2030, while some estimates suggest $400 billion or more by end of 2026 if institutional adoption accelerates. To put this in context, the RWA market went from virtually nothing 3 years ago to over $30 billion today. It is one of the fastest growing sectors in all of crypto. Ethereum hosts over 60% of all tokenized RWAs by value. Stellar, Polygon, Solana, and Avalanche capture meaningful secondary share. Most institutional products, including BlackRock's BUIDL fund and Franklin Templeton's fund, are on Ethereum or Ethereum-compatible chains, and the institutions driving this growth are not small crypto startups. They are the largest financial firms in the world. BlackRock launched its BUIDL fund on Ethereum and hit $520 million in 40 days. Franklin Templeton, JPMorgan, Goldman Sachs, and BNY Mellon all followed. This is not a crypto experiment anymore. This is Wall Street meeting blockchain, and it is happening right now. The main types of real-world assets being tokenized in 2026. Now let's look at what specific assets are actually being tokenized in 2026, because this is where it gets really interesting. Category 1, U.S. Treasury bonds. This is by far the largest category. U.S. Treasuries dominate at 45% of the total tokenized RWA market. With over $8.7 billion on-chain, why are Treasury bonds so popular to tokenize? Because they are the safest yield-bearing asset in the world. U.S. government bonds pay interest currently around 4 to 5% per year, and they are backed by the full faith and credit of the United States government. Before tokenization, buying Treasury bonds required going through a broker, meeting minimum investment requirements, and waiting days for settlement. Now, products like BlackRock's Biddle Fund and Ondo Finance's tokenized Treasury products let anyone earn Treasury yields 24/7 with instant settlement and no minimum investment barriers. Category 2, Tokenized Gold. Gold has been a store of value for 5,000 years, now it is on the blockchain. Products like Pax Gold PXG and Tether Gold XAUT represent physical gold stored in vaults. Each token equals 1 troy ounce of gold fully redeemable. Tokenized gold grew 227% in a recent tracking period, driven by institutional hedging during geopolitical volatility. The advantage over physical gold is obvious: you can buy, sell, and transfer tokenized gold instantly at any time of day, from anywhere in the world, with no storage costs or security concerns. Category 3, Private Credit. Centrifuge and Maple Finance tokenize business loans and credit facilities that previously required $1 million plus minimums. These instruments yield 8 to 12% annually and represent one of the fastest growing RWA categories in 2026. Private credit loans to businesses has historically been available only to institutional investors with massive capital. Tokenization opens this high-yield asset class to everyone. Category 4, Real Estate. Real estate tokenization is still in its early stages but growing rapidly. Platforms are tokenizing income-generating properties, commercial buildings, apartment complexes, warehouses, and allowing fractional ownership. High-value assets like real estate can be digitally divided into affordable fractions, allowing multiple investors to hold partial ownership in an asset that was previously inaccessible. Category 5, Tokenized Stocks and Equities. This is the newest and most exciting frontier. In April 2026, platforms launched tokenized SpaceX pre-IPO shares on Solana, and Janus Henderson launched tokenized S&P 500 and CLO fund tokens. These give retail investors access to assets that previously required accredited investor status or $250,000 minimums. Major crypto platforms have also started offering tokenized versions of publicly traded stocks, allowing 24/7 trading of equities that traditionally could only be traded during stock market hours. Why RWA tokenization is revolutionary? 5 key benefits. Now let's talk about why this matters. Why is tokenizing real-world assets such a big deal? Here are the 5 most important benefits. Benefit 1, fractional ownership. Tokenization enables fractional ownership. High-value assets like gold, real estate, or art can be digitally divided into affordable fractions, allowing multiple investors to hold partial ownership in assets that were previously inaccessible. A $10 million building becomes accessible to someone with $100. A $5,000 gold bar becomes accessible to someone with $10. This democratization of investment is genuinely revolutionary. Benefit 2, 24/7 trading and instant settlement. Traditional financial markets are open 9 to 5, Monday to Friday. RWA tokens trade 24 hours a day, 7 days a week, 365 days a year, and settlement, the process of actually transferring ownership, happens in seconds on a blockchain, compared to 2 to 3 business days in traditional finance. Benefit 3, real yield that does not depend on crypto prices. RWA tokens do not need crypto markets to go up for you to make money. If you hold tokenized treasury bonds, you earn yield every day regardless of what Bitcoin is doing. This is a massive advantage. Most crypto returns depend on price appreciation. Prices go up or they do not. RWA yield comes from real economic activity, interest payments, rental income, business loan repayments that continues regardless of market conditions. Benefit 4, global accessibility. Tokenization increases access for global investors. It democratizes access to investments like U.S. government bonds or public stocks, especially for individuals in underserved markets, by significantly lowering entry barriers. Someone in Nigeria, Vietnam, or Argentina can now access U.S. Treasury yields or fractional real estate ownership assets that were completely out of reach before blockchain technology. Benefit 5, transparency and programmability. Every RWA Token transaction is recorded on a public blockchain, fully transparent and auditable, and because tokens are programmable, yield distributions, compliance checks, and ownership transfers can all be automated through smart contracts, removing paperwork, middlemen, and delays. How RWA tokenization actually works step by step. Now let's look at how the tokenization process actually works, because understanding this will help you trust it. The actual process has 4 steps. Step 1, asset selection and legal structure. The asset, a building, a bond, a fund, is legally structured, usually through a special purpose vehicle or SPV. This is a legal entity created specifically to hold the asset and issue tokens against it. The legal structure ensures that token holders have a real, enforceable claim on the underlying asset. Step 2, valuation and verification. The asset is independently valued and verified. For real estate, a property appraisal. For treasury bonds, the face value and yield are verified. For gold, physical audits of the vault. This step ensures that the tokens actually represent real value. Step 3, token creation. Digital tokens representing ownership are created on a blockchain. The total number of tokens corresponds to the total value of the asset, divided into whatever fraction makes sense. Each token is a smart contract that encodes ownership rights, yield distribution rules, and transfer restrictions. Step 4, distribution and trading. The tokens are distributed to investors through a platform, either directly or through a regulated exchange. Investors can then trade their tokens on secondary markets, receive yield payments automatically through smart contracts, and redeem tokens for the underlying asset according to the terms of the agreement. The entire process that once required months, millions of dollars, and teams of lawyers can now be completed in weeks and with much lower costs. The biggest players in RWA in 2026. Who is leading the race? Let's look at the biggest names driving the RWA revolution in 2026. BlackRock BUIDL Fund. BlackRock launched its BUIDL fund on Ethereum and hit $520 million in 40 days, making it one of the fastest growing tokenized funds in history. BUIDL is a tokenized money market fund that holds U.S. Treasury bills, cash, and repurchase agreements, offering investors stable, yield-bearing exposure through a blockchain token. Ondo Finance. Ondo Finance completed a cross-border tokenized treasury settlement pilot with JPMorgan and MasterCard, with the XRP ledger processing the transaction in under 5 seconds. Ondo is one of the leading platforms for retail-accessible tokenized treasury products, offering products like OUSG, a tokenized U.S. Treasury bond fund. Franklin Templeton. Franklin Templeton, one of the world's largest investment managers, launched the Benji token on Stellar and Polygon, representing shares in its government money market fund. This was one of the first examples of a traditional asset manager putting a regulated fund directly on a public blockchain. Maple Finance. Maple Finance is the leading platform for tokenized private credit institutional-grade business loans accessible to crypto investors. It holds the largest market share in the on-chain private credit sector in 2026. Chainlink. Chainlink serves as critical infrastructure for the entire RWA ecosystem, providing the Oracle technology that connects real-world data like asset prices, interest rates, and verification information to blockchain smart contracts. A $1.1 billion migration to Chainlink CCIP highlights its central role in the RWA ecosystem. Risks of RWA investing. What you need to know: RWA tokenization is genuinely revolutionary, but like any investment, it comes with real risks. Let's look at them honestly. Risk 1, counterparty risk. The token is only as good as the custodian holding the underlying asset. If the custodian fails or is fraudulent, the token becomes worthless. Always check who holds the underlying asset and what their regulatory status is. A tokenized treasury bond is only valuable if the entity holding those treasury bonds is legitimate and solvent. Always research the issuer before investing. Risk 2, regulatory risk. Tokenized securities are still securities, different jurisdictions treat them differently. What is legal to hold in one country may be restricted in another. Always verify the regulatory status in your jurisdiction. The regulatory environment for tokenized assets is still evolving. Products that are legal today may face restrictions tomorrow and vice versa. Risk 3, liquidity risk. Secondary markets for many RWA tokens are still thin. A tokenized $5 million commercial property loan may have limited buyers if you want to exit quickly. Unlike Bitcoin or Ethereum, which trade billions of dollars every day, many RWA tokens have limited secondary market liquidity. This means you may not always be able to sell at your desired price quickly. Risk 4, Smart contract risk. RWA tokens run on smart contracts which can have bugs or vulnerabilities. Always stick to established, audited protocols with strong track records. Risk 5. Oracle risk. RWA tokens depend on external data sources called oracles to bring real-world information onto the blockchain like current asset prices or interest rates. If the oracle data is manipulated or incorrect, it can affect the value of your tokens. How to get started with RWA investing in 2026. So how do you actually start investing in real-world assets as an everyday investor? Here are your options in 2026. Option 1. Tokenized treasury bonds. Lowest risk. The easiest entry point. Platforms like Ondo Finance offer tokenized U.S. Treasury products that are accessible to retail investors in many jurisdictions. You deposit stable coins like USDC and receive tokens that earn Treasury yields currently around 4 to 5% per year. This is the most beginner-friendly RWA investment stable yield, backed by the U.S. government, with no crypto price risk. Option 2, Tokenized gold, medium risk. Buy Pax Gold PXG or Tether Gold XAUT on a major exchange. These tokens represent physical gold in a vault and track the price of gold directly, a great way to hold gold without the hassle of physical storage. Option 3. RWA tokens higher risk, higher reward. Invest in the governance tokens of leading RWA protocols like Ondo from Ondo Finance. These tokens give you exposure to the growth of the RWA ecosystem itself, higher risk but significant upside if the RWA sector continues to grow as projected. Key advice for beginners: always start small, always research the issuer and custodian, always check whether the product is available in your country, and never invest money you cannot afford to lose even in yield-bearing RWA products. Conclusion: let's quickly recap everything we covered today. What are RWAs? Real-world assets are traditional financial and physical assets, treasury bonds, gold, real estate, stocks, private credit that have been tokenized and put on a blockchain. Why does it matter? RWA tokenization enables fractional ownership, 24/7 trading, instant settlement, global access, and real yield that does not depend on crypto prices. How big is it? As of April 2026, tokenized RWAs excluding stablecoins stand at $30 billion on-chain, and projections suggest $100 billion by the end of 2026 and $2 trillion by 2030. Who is driving it? BlackRock, JPMorgan, Franklin Templeton, Goldman Sachs. The biggest names in traditional finance are already here. Key risks to watch: counterparty risk, regulatory risk, liquidity risk, and smart contract risk. How to start? Tokenized treasury products on Ondo Finance, tokenized gold through PXG or XAUT, or RWA governance tokens like Ondo. Real-world assets are the bridge between traditional finance and blockchain technology. In 2026, that bridge is being built at extraordinary speed, and those who understand it early will be best positioned to benefit. If this video helped you, please hit the like button and subscribe to the Crypto Skill. Drop a comment below. Which type of real-world asset are you most interested in? Treasury bonds, gold, real estate? Let me know. See you in the next video.